to Mark Gibson Shumaris channel. Accountant with designations CPA, MBA, CMA, ACPA, ASA, Australia. Enjoy learning!
Once again, good afternoon, class, and welcome to the updates on financial accounting and reporting. Today, we'll discuss diluted earnings per share. So, actually, this is just a continuation of the topic on the basic earnings per share. So, as we've discussed previously, sabi natin, basic earnings per share is just an indicator. So, this is an important aspect that a prospective investor or someone would like to invest in a company would really like to look into, no? So prior to investing, kasi nga naman basic earnings per share is simply looking into how much a share would earn, no? After deducting preferred dividends, no? So simply this is your net income less preferred dividends over the weighted average outstanding number of shares, no? Weighted average number of outstanding shares, no? Kaya sabi natin 1 also. Okay, so today, we'll just continue building on that discussion, but we'll look into diluted earnings per share, no? So sabi natin, when we say dilutive, no? So simply it's causing a reduction in the value of shareholding due to the issue of additional shares in a company. So what are the factors ba contributing to the reduction in the value of shareholding, no? So there are instances kasi that the company will enter into contract, no? Or will issue financial instrument that will give rise to potential ordinary shares, no? So for example, the company can issue a bond, no? That bond can be converted into ordinary shares in the future, no? So whether in the discretion of the company or of the issuer or the bondholder, no? So technically the company issued the bond, pero yung sinasabi ko, they can convert it, no? So I'm sure you have encountered those types of financial instruments in your financial accounting and reporting. So all we have to do right now is to refresh, no? To refresh your mind on those types of financial instruments, no? Sige. So ito na nga, pinag-uusapan natin what are the potential ordinary shares, no? So what are the instances where potential ordinary shares occur? So number 1, we have convertible bonds payable. Ito yung sinasabi natin kanina. It is dilutive if its conversion decreases the basic earnings per share or increases basic loss per share. Actually, no, di na dapat natin ito nilagay kasi nga technically, if there are potential ordinary shares here, it will reduce your basic earnings per share. Kasi imagine mo, no? Ano nga ulit yung formula natin sa basic earnings per share? It's the net income less the preferred dividends over the weighted average number of shares outstanding, no? So imagine if there's a conversion of bonds payable to ordinary shares, your weighted average number of shares outstanding, yung denominator mo, will increase. So, ano yung assumption na kailangan natin gawin? So, in computing for the diluted earnings per share, no? So, as if it is converted to ordinary shares, no? So, anong ibig sabihin lang nun? No? So, when we encounter problems involving convertible bonds payable and we're being asked to compute for the diluted earnings per share, ang assumption natin is this will be converted to ordinary shares at the earliest possible time, no? So, at the earliest, so for para lang mas mabilis, no? So, for example, we've issued a convertible bonds in September 2021. So as early as January 2021, we'll assume that the bonds payable has been converted already to ordinary shares. No? So that's how we should take into account this type of transaction. No? So let's go to number 2, convertible preference shares. So again, pag convertible preference shares naman, so ibig sabihin the company issued preference shares, and then those preference shares can be converted into ordinary shares. No? So again, it's dilutive if its conversion decreases the basic earnings per share or increases the basic loss per share. So again, it is as if converted to ordinary shares. Now, number 3, share options and warrants. No? So dilutive if in the money. Ano ba yung ibig sabihin ng in the money? Meaning if it's favorable. No? So sabi na, binigyan ko rin kayo dyan ng quick guide. Kasi di ba sabi natin pag options, basically it gives you the right to either buy or sell. So in a call option, you have the right to buy. And then in a put option, you have the right to sell naman. So sabi natin, it is as if exercised to purchase ordinary shares. No? So paano natin masabi if it's in the money? So if the exercise price is less than the average market price of ordinary share, no, in a call option, then we are in the money. So parang ganito lang yan. No? The average market price is 50. The exercise price is 45. So 45 versus 50. No? So kung ang market price ng stock is 50, parang ikaw, without even thinking, no? Parang mali yata yun. Without even analyzing, ganun na lang. Kasi syempre kailangan mag-isip. Pero yung approach na ginagawa ko is parang I provide you with cheat sheet to lessen yung analysis part, no? I hope you get what I mean, no? Para lang at least mas mabawasan yung pag-a-analyze natin with the use of cheat sheet like this, no? So parang ganito, no? 50 pesos yung market price, but you entered into call option. Sabi natin, in a call option, you have the right to buy or right to purchase. No? Siyempre, kailan mo ba i-exercise yung right na yun? If the exercise price is of course less than the market price. No? So yun nga example natin. You have 50 pesos market price. You have the exercise price of 45. Of course, you will exercise it because you can gain out of it. No? So imagine you'll just purchase it for 45 pesos and the market price is 50 pesos. Eh meron ka na agad gain, no? Na 5 pesos. So what if you're a trader? No? So you purchase it for 45 and then you can sell it right away for 50. No? So you have a gain of 5 pesos. No? Kaya tandaan, in an option, you are given the right, no, but not the obligation, no. So it's different naman dun sa other party. The other party involved is obligated, no, to sell, no. So that's in a call option. I hope that's clear enough, no. But there is a separate discussion on derivatives, no. Actually, that's not part of the updates on financial accounting and reporting, but I can share the link with you on the on my discussion on the derivatives. So I mean, there's no harm for all of you to look into that, no, so that you can have I mean, you can refresh your understanding on different derivative instruments. No? Okay, so pag-usapan ngayon natin yung mga formula. Of course, for convertible bonds, sabi kasi natin, di ba? It's as if that the conversion, as if this has been converted. No? So tapos assumption number 2 is as if it has been converted at the earliest possible, the earliest possible time, no? So, what's the formula? Di ba ang formula lang naman natin in basic earnings per share, it's net income less the preferred dividends over the weighted average number of shares outstanding. Yun yung wanoso, ha? Para lang at least mas mabilis isulat. Haba kasi nun, no? So in this time, since na pinag-uusapan natin is convertible bonds payable, ang gagawin natin is we'll just include additional items in the formula. So net income or net loss less the preferred dividends plus the after-tax interest on convertible bonds. So, sige, stop muna tayo dyan. Pag-usapan natin bakit kailangan i-add. So imagine class, you have a bonds payable, no? So of course you are paying interest expense, no? On that particular bonds, no? So we are adding it back to the net income kasi nga as if wala tayong binayarang tax. So di ba sa net income, then the interest expense has already been deducted, no? Of course, no, alam mo na yan kasi nga in your traditional profit and loss statement, di ba? Bago ka mag-come up sa net income mo, interest expense and all other expenses have been deducted already, no? So in this case, we are adding it back kasi nga, di ba, the assumption is we have already converted this at the earliest presentation. So, ibig sabihin, we have to take out the interest expense that would have been paid, no, for the bonds payable kasi nga as if kinonvert natin siya. So kung kinonvert natin siya, ergo wala tayong babayarang interest, no? So yun lang naman yun. Over it, one also BEPS. So ibig sabihin kung ano yung diniscuss natin last time, it's the same. Plus the weighted average number of shares outstanding for the unconverted potential ordinary shares, no? So later on, pag-uusapan natin yan, we'll illustrate this by discussion problems para at least mas maintindihan natin yung formula, no? Next, convertible preference shares. So the formula is net income or net loss. O yan, pag-usapan natin yung numerator. Pansinin, wala na yung preferred dividends. Why? Kasi nga, ang assumption natin, of course, no, preferred dividends, yan yung binabayad natin sa mga preference shares, no? And the assumption is we have issued convertible preference shares, and the assumption is lahat na convert at the earliest presentation, no? So kung na lahat na convert, wala tayong babayarang preferred dividends, no? So imagine mo lang, nag-issue ng preference shares pero in calculating the diluted earnings per share, we are taking out, di ba, yung effect ng transaction. So in this case, this is convertible preference shares. So as if walang preference shares, no? So therefore, inaalis natin yung preferred dividends. Okay? Pansinin, no? And then of course, the denominator will be the one also BEPS, no? So it's the same, plus the weighted average number of shares outstanding for the unconverted potential ordinary shares. Okay? And then finally, share options and warrants, it's the same numerator over the one also BEPS plus the weighted average number of shares outstanding for the unexercised potential ordinary shares. Okay, so what if the company entered into different transactions, no, involving convertible bonds payable, convertible preference shares, and then meron pang options and warrants, no? So in that case, we have to rank them based on the degree of the which one is the most dilutive to the least one. So meaning the least incremental EPS to the highest incremental EPS. Of course, ang pinaka-dilutive of these three would be the option and warrants, no? Since there will be no incremental EPS. Incremental, di ba? Pag sinabi natin incremental class, this is just the difference, no? E pansinin natin, ha? O ulit, ha? Ulitin ko yung statement ko. Pag sinabi natin incremental, it's just the difference, no? So, kung halimbawa meron kang option 1 and option 2, kunin mo lang yung difference ng dalawa, that would be your incremental. So parang ganito, no? So you have sales, pag-usapan mo natin to, you have sales last year of 50, sales this year of 60. Pag tinanong ka how much is the incremental sales, so of course your answer would be 10. No? So 60 minus 50. So ganun din sa earnings per share. Pag sinabi natin incremental EPS, it's the it's the change, no? Pansinin, dito sa formula, share option, and warrants, it's the same numerator, no? So net income minus the preferred dividends. This is the same numerator when you compute for your basic earnings per share, no? So therefore, sabi natin, this is the most dilutive since there is no incremental EPS. So basic earnings per share and diluted earnings per share for options and warrants have the same numerator. So therefore, no incremental EPS. Okay? Kaya ko siya inuna kasi I wanted to highlight that this should be dealt with first, no? Kasi nga this is the least, this will have the least incremental EPS for the very reason na, for the obvious reason that there's no incremental EPS. Okay, now how to compute for the incremental EPS under when it's convertible bonds payable. Now, of course, it's the after-tax interest expense over the number of potential ordinary shares. Paano naman pag convertible preference shares? No? So it's the preference dividends over the number of potential ordinary shares. Okay, so that's diluted earnings per share. O sige, para at least masolidify natin yung understanding of the concepts, no, around diluted earnings per share. Of course, palagi nating approach is we'll do different discussion problems. No? So pag-usapan natin yung problem number 1. Let me read the requirements first. So ito, parang review mo na rin of our previous topic on basic earnings per share. No? So we'll compute basic earnings per share at the same time diluted earnings per share. No? So requirement number 1, what amount should be reported as basic earnings per share? And number 2, what amount should be reported as diluted earnings per share? No? So let me read the problem. An entity had 200,000 pesos 50 pesos par value ordinary shares outstanding on January 1, 2021. In addition, on January 1, 2021, the entity had issued 30,000 convertible cumulative 10% preference shares with 100 pesos par. These preference shares were converted on September 1, 2021. Each preference share was converted into 5 ordinary shares. The preference dividends for the entire year were paid in full before the conversion. The entity had no other potential dilutive securities. Net income for the current year was 5 million. Yun, no? So, clear naman lahat ng mga information, pero let's have problem number 1. Screen ko ngayon. Sige. O, di ba ang assumption ay number one, pag-usapan mo natin yung basic earnings per share. No? So our formula would be the net income less your preferred dividends. No? So we have net income that's given naman, that's 5 million. And then the preference share dividends, pansin in class, this is cumulative. No? So whether there's declaration or not, we have to compute for the preference share dividends. No? But in this case naman kasi, sinabi dyan, the preferred dividends for the entire year were paid in full before the conversion. No? So therefore, that's 30,000 multiplied by 100 multiplied by 10%, representing share dividends. No? Okay, so okay na tayo sa numerator natin. So that's 5 million less 300,000. So that would be 4,700,000. Ngayon, pag-usapan natin yung weighted average number of shares outstanding. No? So we have ordinary shares, 200,000 outstanding on January 1, 2021. No? So to get the weighted average number, so that would be 12 over 12. No? So that's outstanding for the whole year. No? Now, kailan ba na convert yung preference shares? No? So take note, the preference shares were converted on September 1, 2021. No? So September 1, 2021, that's 30,000 multiplied by 5. Sabi kasi dyan, each preference share was converted into 5 ordinary shares. Ilan ba yung inisyu natin? 30,000 preference shares. No? Convertible daw into 5 ordinary share per preference share. So that's 30,000 multiplied by 5. Ito class ang tip ko lang sa mga gantong problem, read it slowly kasi nakakalito. Imagine, no? You have to correctly state how much would be the preference share. So in this case, we have issued 30,000. Paano daw yung conversion? Each preference share was converted into 5. So wag mo papalito dyan. No? So reading comprehension, ang palagi lang sinasabi, read it slowly. No? So sayang kasi kung sa part na yan ay magkakamali ka. No? Okay. So that's 150,000. No? So kung September siya na-convert, how many months siyang outstanding in the year? No? So that's September, October, November, December. It's September 1 plus ha. Huwag magpapalito. Kung September 1 yan, you have to count the full month. No? So that's September, October, November, December. So 4 months. No? So or 4 over 12. So 150,000 multiplied by 4 over 12, that would be 50,000. So the total weighted average number of shares outstanding would be 250,000. So computin natin yung basic earnings per share. That's 4,700,000 over 250,000 weighted average number of shares outstanding. So BEPS is 18.80 pesos or letter A. Okay. Pag-usapan ngayon natin yung diluted earnings per share. Lagay ko to dito para may guide tayo on how to calculate for it. No? So it's convertible preference shares. No? So sabi natin, dito ko talagay para kita pa rin. So sabi natin, in calculating for your diluted earnings per share, when you have a convertible preference shares, no? So in this case, kasi convertible preference shares, nag-issue tayo ng 30,000 convertible preference shares. No? The formula is net income over 1 also BEPS plus 1 also unconverted potential outstanding, potential ordinary shares. No? So, diretso na natin. No? So, of course, the numerator will exclude the preference share. Ulitin ko kung bakit. No? It's as if all the convertible preference shares were converted at the earliest presentation. No? So, kung na-issue yan, noong January 1, 2021, we will assume that it's as if converted as early as January 1, 2021. So, ganun na. That's the assumption. No? So, therefore, kung ang assumption natin is na-convert siya noong January 1, 2021, wala na tayong kailangang pangbayaran na dividends. So, the numerator would be 5 million, representing your net income. Okay? Now, pag-usapan natin yung weighted average number of shares outstanding. No? So, sabi natin, it's 1 also BEPS. So, kung 1 also BEPS yan, huwag na natin ulitin yung calculation. It's simply that 250,000 na na-compute natin kanina. Okay? So, lagay ko dyan, 1 also BEPS. Ngayon, pag-usapan ngayon natin yung potential ordinary share from the convertible preference share. No? So, sabi natin, it's 150,000. Paano na-compute yung 150,000? That's 30,000 multiplied by 5. Pero, ang kailangan natin kunin ng months would be yung number of months. Sakit lang. Ha? Pusa ko naglampitin sa lamp eh. Sorry about that. O sige. Pag-usapan ngayon natin yung wanoso unconverted potential ordinary shares. No? So pansinin mo lang naman dito, it's still 150,000. Pero pansinin mo dito, this is the number of months where the convertible preference shares are not yet converted. No? So meaning this is from January to October. No? January to August, no? Kasi nga ang conversion happened in September. Okay? So 150,000 multiplied by 8 over 12, so that's 100,000. So 250 plus 100, that would be 350,000 shares. No? So that's 5 million over 350,000. So the answer is 14.29 or letter A. So siguro ang isa pang kailangang tandaan dito is yung palagi ko sinasabi kanina na effect ng preferred dividends. No? So it's as if converted at the earliest presentation, so wala ka nang kailangang bayarang dividends. No? So in this case, the date of issuance of the convertible preference shares took place on January 1, 2021. No? So it's as if converted. No? It's as if those preferred shares were converted to ordinary shares on January 1, 2021. So if it's converted on January 1, 2021, wala ka na kailangang bayaran na preferred dividends. Okay, so that's problem number 1. Okay, so let's go to problem number 2. So requirements are, number 1, what amount should be reported as basic earnings per share? And number 2, what amount should be reported as diluted earnings per share? An entity had 200,000 ordinary shares outstanding on January 1, 2021. On January 1, 2021, the entity had issued convertible 8% bonds with face amount of 5 million. The bonds were converted on October 1, 2021, and 40 ordinary shares were issued in exchange for every 1,000 pesos bond. Net income for the current year was 6 million. The income tax rate is 25%. Now, the income tax rate in this case is relevant kasi nga ang kailangan natin ma-compute is the after-tax interest expense. Okay? Sige, let's have problem number 2. But this time on the convertible bonds payable naman. So, parang as a review ulit, pag-usapan natin how to calculate for your basic earnings per share. No? So, sabi natin, basic earnings per share, it's simply your net income less preferred share dividends. But in this case naman, wala naman tayo napag-usapan na preference shares. No? So, 0. So simply, your numerator would be your net income. Net income is 6 million. So okay na tayo dyan. Now, let's go to the weighted average number of shares outstanding. So we had 200,000 ordinary shares outstanding on January 1, 2021, and there's no other transactions that took place that will impact the outstanding shares. So that 200,000 multiplied by 12 over 12. Okay tayo dito sa first part. So, pag-usapan ngayon natin yung bonds conversion. No? So, kailan ba siya na-convert? Sabi dyan, October 1, 2021. Pero ilang shares? No? So, 5 million pesos over 5 million divided by 1,000 para makuha natin yung number of shares, no? Multiplied by 40 ordinary shares, no? So that's 200,000, no? So that 5 million face amount of bonds payable can now be converted into ordinary shares, no? 200, equivalent to 200,000 ordinary shares. Okay, and then it was converted on October 1, 2021. No? So bilangin natin how many months outstanding. So October, November, and December. So that's equivalent to 3 months. So 200,000 multiplied by 3 over 12, so that would be 50,000. So kunin lang natin yung sum ng dalawa. So that's 250,000. So meron na tayo ngayon debts of 24. No? So that's 6 million over 250,000 or 24 pesos. That's letter C. Pag-usapan ngayon natin yung diluted earnings per share. No? So, lagay ko lang siya side by side. Tapos, making problem dito. Para kita pa rin in one screen. Okay. So, sabi natin, this is convertible bonds payable. No? So, in convertible bonds payable, we have to account for another factor. No? So, that's the after-tax interest on convertible bonds. So, computin na natin yung interest. That's 5 million, the face amount, multiplied by 8%. Tandaan, it's the after-tax. No? How much is the tax rate? It's 25%. No? So para makuha yung after-tax, that's 100% minus 25% or simply 75%. And of course, kunin lang natin yung prorata kasi we're not computing for the whole year's interest. No? So remember, it was converted in October 1, 2021. So therefore, from January to September lang yung interest na kailangan natin compute. No? So that's 9 months. So 5 million multiplied by 8%, multiplied by 75%, 75% again to remove the income tax rate, multiplied by 9 over 12. 9 over 12 representing interest from January to September 30, 2021. So that would be 225,000. Again, Basa, we are doing this. We are adding back the after-tax interest on convertible bonds kasi nga the assumption is this was already converted at the earliest presentation. So it was issued January 1, 2021. So ang assumption natin is it was converted on January 1, 2021. So with that, we are taking out the effect of the interest in the net income. So as if kung na-convert yan nung January 1, 2021, no, as if wala tayong bonds payable. So ergo, wala tayong dapat bayaran na interest expense. Okay? So dahil alam natin yung numerator, let's compute. No? So that's 6 million. Wala naman tayong preferred share dividends. So 6 million minus 0 plus 225,000. So that's 6,225,000. Pag-usapan ngayon natin yung denominator. Sabi natin sa denominator, it's the wanoso BEPS plus the wanoso unconverted potential ordinary shares. Okay? Of course, kung wanoso BEPS yan, so that's 250,000. That's the same calculation as before. No? So, huwag na natin ulitin. Ito palagi yung sinasabi ko. No? So, what if this is an actual quiz or in the actual board exam? No? So, you have to make sure na yung handwriting mo is organized. No? So at least you don't have to waste your time computing for the wanoso BEPS once again. Okay? So yun lang naman palagi yan. And then of course, we'll compute for the potential ordinary shares. No? So sabi natin, establish na natin that's 200,000. No? So paano ulit na compute yung 200,000? That's 5 million over 1,000 multiplied by 40. And the number of months, no, before it was converted. No? So that's 9 over 12. That's from January to September. So 200,000 multiplied by 9 over 12, that's 150,000. So just get the sum, 250 plus 150, that would be 400,000. So 6,225,000 over 400,000 shares. So that's 15.56 or letter A. Okay, so again class, this is convertible bonds payable. No? So the only item new here is the interest. No? So take note, it should be after tax. Again class, do not argue with the problem on the correct income tax rate to be used. No? Baka sabihin mo, this is 2021, this should be 30%. I'm not even sure if it's 30% for 2021. But the thing is, the point is, do not argue with the problem. This is not your tax subject. No? So we have to follow what's provided in the problem. So in this case, it's 25%. Let's use 25%. No? Baka kasi sabihin nyo, it's not the correct income tax rate for 2021. I'm not even sure what's the tax rate for 2021. Okay, so that's on convertible bonds payable. Pag-usapan ngayon natin, that's problem number 2. Let's go to problem number 3. Problem number 3, what amount should be reported as basic earnings per share? And number 2, what amount should be reported as diluted earnings per share? Let me read the problem. An entity had 200,000 ordinary shares issued and outstanding on January 1, 2021. An exercise share options to purchase 50,000 ordinary shares at 20 pesos per share were outstanding at the beginning and end of 2021. The average market price of ordinary share was 25. During 2021, net income for the year was 6 million. The income tax rate is 25%. Ito, pag-usapan muna natin. Are we in the money? Is it favorable to us? So meron tayong share options. No? So this is call option kasi nga you are given the right to purchase. No? Ang market price daw is 25. How much is the exercise price? 20. So kung ikaw ba yung company, will you exercise it? Yes. Why? Kasi nga, I will buy it for 20 pesos lang. And the market price was 25. No? So I will gain from this transaction. So it's in the money. Okay? So I hope that's clear enough. So let's have problem number 3. So in problem number 3, pag-usapan muna natin ulit yung basic earnings per share. So we have net income, net income of 6 million. That's given, no? And there's no mention about preference share. No? So it's 0. We also have 200,000 ordinary shares, no? Pansinin class, the share options were an exercise from the beginning and end of 2021. So meaning, walang naging conversion. No? So walang nangyaring purchase, no, of ordinary shares. So walang nangyaring exercise of call option. So in that case, ang kailangan lang natin compute is the 200,000 ordinary shares. No? So that's 200,000. So 6 million over 200,000. So that's 30 pesos or letter D. So ganun kasimple. No? Pag-usapan ngayon natin yung diluted earnings per share. No? So kung lagay ko to dito. In diluted earnings per share, we have to account for the treasury method. No? So this is used to compute for the incremental shares or potential ordinary shares. No? So, but there are different assumptions. Number 1, options and warrants are assumed to be exercised. Number 2, proceeds from the exercise were used to purchase treasury shares at the average market price. And number 3, the incremental shares is equivalent to number of shares less the number of treasury shares. So sabi natin kasi, di ba, treasury shares is our company's own shares, no? that we reacquired with the intention of reissuing it in the future. No? So we're not terminating them. Okay. Of course, to compute for this, no? So we have the adjustment factor. No? So to get the adjustment factor, it's simply the average market price less the subscription price over the average market price. No? So in this case, para ma-apply na natin itong problem, no? Lagay ko siya dito. Isin ko to. Kita pa rin sa screen. Okay. So how much is the average market price? It's 25. How much is the subscription price? It's 20. So 25 minus 20 over the market price of 25. So the adjustment factor would be 0.2. Okay. Now, to compute for the potential ordinary shares, kailangan natin yung adjustment factor na yan. No? So we have 50,000 ordinary shares multiplied by the adjustment factor. No? So the potential ordinary share would be 10,000. Okay? So this is applicable, no, for the share option and warrants. No? So this is important kasi kailangan natin mag-compute ilang shares ba yung additional. No? Okay, so going back to calculation of diluted earnings per share. No? So we have net income of 6 million. So na-establish na natin yung numerator natin. Now, sabi natin, di ba, formula natin dito sa share option and warrants, it's 1 also BEPS plus the 1 also for the unexercised potential ordinary shares. No? So 1 also BEPS na-establish natin yun kanina. This is the 200,000. Now, in terms of the potential ordinary shares on the share options, alisin ko to, it's the 10,000. Itong 10,000 na to, yan yung na-compute natin na potential ordinary shares. No? So this one. Multiplied by 12 over 12 kasi nga as if this was exercised at the earliest presentation. So January 1, 2021. So that's 10,000. Kunin lang natin yung sum. So that's 200,000 plus 10,000. That's equivalent to 210,000. 6 million over 210,000, the diluted earnings per share would be 28.57 or letter B. Okay, so there's a new concept no discussed along with the formula on the diluted earnings per share. No? So that's the adjustment factor. This is important to compute for the potential ordinary share. No? So in this case, na-introduce naman natin how to compute for the adjustment factor. It's simply your average market price less the subscription price or the exercise price over the average market price. Okay, so that's problem number 3. Okay, so let's go to problem number 4. Requirements are, number 1, what amount should be reported as basic earnings per share? Number 2, what amount should be reported as diluted earnings per share? So ito na yung pinag-uusapan natin kanina. What if the company enters into different financial instruments involving convertible preference share, convertible bonds payable. So, and yung share options and warrants. No? So ito, lahatan na. An entity reported the following information on December 31, 2021. Ordinary share capital, you have 110,000 shares. Convertible non-cumulative preference share capital, 20,000 shares. 10% convertible bonds payable, for 3 million pesos. Share options to purchase 60,000 shares at 15 pesos were outstanding. Market price of ordinary share was 25 on December 31, 2021. The average is 20 during the year. The entity paid the annual preference dividends of 5 pesos per share. The preference shares are convertible into 40,000 ordinary shares. The 10% bonds are convertible into 50,000 ordinary shares. The net income for 2021 is 650,000. The tax rate is 25%. No? Okay, class. Pag-usapan muna natin, are we in the money? Dun sa share options. No? So ano yung kailangan nating i-check? No? It's the market price of 25 versus the exercise price of 15. No? So it's favorable to us. So therefore, it's in the money. Pero tandaan class, in computing for the adjustment factor, it's the average. Huwag magpapalito dyan. It's the average market price that is relevant. Bakit natin nasabi yun? Kasi nga meron ditong data on the market price and average. So we should use 20. Okay? So be careful. No? So let's have problem number 4. Problem number 4. Oops, put yung mga reference. Anyway, isa-isa naman natin yan later. Ay, hindi. Alisin ko na ito. Sige. Problem number 4, let's compute for the basic earnings per share muna. So, net income, na-establish natin yan. That's given 650,000. Preference share, also provided, that's 20,000 shares multiplied by 5. No? So, the entity paid the annual preference dividends of 5 pesos per share. No? So, kung hindi ito na-mention class, we're not going to pay dividend kasi it's non-cumulative. Tandaan, pag cumulative lang tayo magbibigay ng ng dividends, no? Whether declared or not. No? So pag non-cumulative, it has to be declared, no, before we calculate for it. No? So that's 650 less 100,000. So that's 550,000. Establish natin yung numerator natin. Let's go now to the basic earnings per share. I mean, the weighted average number of shares outstanding. We had ordinary shares of 110,000. Pansinin natin na wala namang mention about conversion of these instruments, no, for year 2021. So the assumption is we only have 110,000, no, outstanding for the year. No? So 110,000 110,000 shares. So that's 550,000 over 110,000 shares. No? So, or 5 pesos. So that's letter A. Ulitin ko yun ha. There's no mention kasi na itong convertible preference shares were converted. Hindi rin naman na-convert yung bonds payable. Hindi rin naman in-exercise yung share options. No? So, dahil wala yung mga information na yun, so wala tayong ibang kailangang i-calculate for the weighted average number of shares outstanding for the purpose of calculating your basic earnings per share. No? It's different now to compute for your diluted earnings per share. Unahin na natin yung preference, yung share options. So sabi natin, options mo tayo. Options mo tayo, adjustment factor, it's the average market price less the subscription price over the average market price. So it's 5, paano na-compute yung 5? That's 20 average less 15. So that's 5 over the average, no, of 5, of 20. So that's 0.25. Potential ordinary shares, so that's 60,000 multiplied by the adjustment factor of 0.25 or 15,000. So the incremental earnings per share, so sabi natin, di ba? Ano nga yung formula ng, oops, I think I have it somewhere here. See. Para lang this side by side ulit, no? Ay, hindi yan. Okay. So, ang formula natin, di ba, pag-compute ng incremental earnings per share, yung difference lang. And since sabi na establish natin kanina na under share warrant and options, the numerator will stay the same. No, it's net income less preferred dividends. No? So therefore, it's 0 over the potential ordinary shares. So incremental earnings per share is 0. So, yan lang din naman yung pinag-usapan natin kanina. Sabi natin, it's the most dilutive since there is no incremental EPS. Next, pag-usapan natin yung preference shares. So, preference share, how to compute for the incremental earnings per share, it's simply your preferred dividends over the potential ordinary shares. No? So, in this case, how much is the preferred dividends? So, that's 100,000. No? And the potential ordinary shares would be 40,000. So that's 2.5. Yan yung incremental earnings per share natin. We go now to the bonds. So sa bonds, to compute for the potential ordinary shares, so that's to compute for the incremental earnings per share, kunin natin yung after-tax interest of 225,000. Paano ulit na-compute yung 225,000? So that's 3 million multiplied by the interest rate of 10% multiplied by 75% kasi ng tax rate natin is 25%. No? Multiplied by 12 over 12. No? It's outstanding for the whole year. No? Kahit hindi ko na nga nilagay yung 12 over 12, pero just the same, nilagay ko na lang para maging consistent yung formula natin earlier. No? So that's 225,000 over the potential ordinary shares of 50,000. This is for the non-convertible. 50,000 naman is given. The 10% bonds are converted into 50,000 ordinary shares. Are convertible into 50,000 ordinary shares. No? So that's 225,000 over the potential ordinary shares of 50,000. So the incremental earnings per share would be 4.5. Okay. So dahil na-establish na natin yung tatlo, di ba, ang requirement is we have to rank it. No? So sabi natin, rank number 1 would be option and warrant kasi ito yung least incremental EPS. Okay? Rank number 2, ano ba yung sumunod na mas mababa? 2.5. So preference shares rank number 2. Rank number 3 is bonds. Okay. So with that, compute na natin yung diluted earnings per share. So we have BEPS, number of shares, net income, and EPS. Lagay natin yan. Ha? So BEPS natin, ito naman yung na-compute lang natin kanina. Yun kasi palagi starting point natin. So that's 110,000. 550,000 yung na-compute natin na net income. No? Kanina. This one. Net income less the preferred share dividends. No? So EPS would be 5 pesos. But next, kunin natin yung rank number 1, which is the option. Potential number of shares is 15,000. Na-compute na natin yan kanina using the adjustment factor of 0.25. So kunin natin yung sum. So that's 125,000. Dahil nga wala namang impact to sa numerator, 0. So that's 550,000. No? 550,000 over 125,000. So that's 4.40. Okay, so from 5, bumaba to 4.40. So that's diluted. No? Dahil nga, di ba, ang definition natin ng diluted kanina is anything that will reduce your shareholding. So okay tayo dyan. Ano yung next rank? Next in rank, it's the preference shares. No? So, kunin natin yung preference shares. So, potential ordinary shares, 40,000. Preferred dividends of 100,000. Okay. So, kunin natin yung sum. 125 plus 40, 165,000. 550,000 plus 100,000. So, that's 650,000. 650,000 over 165,000. So that's 3.94. Again, this is still dilutive kasi from 4.40, bumaba siya sa 3.94. Okay. Pag-usapan natin ngayon yung, finally, yung bonds. So we have bonds, 50,000 yung potential ordinary shares. Again, na-establish na natin yung kanina. It's also given the problem. Plus the after-tax interest of 225,000. Again, get the sum. So that's 215,000 shares. And then 875,000. Itong dalawa. 6050 plus 225,000. So get the EPS. So that's 875,000 over 215,000. Pero pansinin, from 3.94, tumaas siya sa 4.07. No? So this is anti-dilutive. So therefore, the answer to question number 2, how much is the diluted earnings per share, would be 3.94. So ito siya. Careful class, that's the reason why we are ranking these financial instruments. We have to rank it para ma-establish natin how much would be the diluted earnings per share. No? So based on the ranking, yung take up. No? So uno natin yung options. So from 5 na EPS down to 4.40. So it's still diluted, no? Okay tayo dyan, bumaba. Next in rank is the preference share, convertible preference share. So from 4.40, after taking into account the option, naging 3.94. Okay pa rin tayo kasi bumaba. But when we look into adding the bonds, from 3.94 naging 4.07. Again, this is anti-dilutive kasi nga hindi na siya bumaba. So it's not satisfying the definition of being dilutive. No? So dilutive is simply reducing, reduction in your shareholding. So since this is anti-dilutive, we are not going to include bonds in the calculation. No? So we'll pick up 3.94 as the diluted earnings per share. So that's letter D. Be careful, no? Kasi that 4.07 is also given in the choices. 5 is also given. 4.40 is given. No? So this is very tricky. That's why sabi na palagi, financial accounting and reporting is the silent killer. Kasi nga, imagine, no, lahat na na-solve mo, nandoon, no? So you have to be very careful in applying the standards. No? So in this case, it should be 3.94 or letter D. So that's problem number 4. And that ends our discussion on the diluted earnings per share. No? So again, if you have any questions, you can send me a note on my personal mail. Of course, no, you can course it through your class videos.
This has been your instructor, Mark Gibson. Thank you for learning with us. See you in our next discussion. Don't forget to like and subscribe. See ya!